Hi everyone. Buying your own home is a dream for many, and the Indian government encourages its citizens to invest in house property with a host of tax benefits. When you buy a house on a home loan, it comes with multiple tax deductions that significantly reduces your tax outgo. So let's take a look at the various benefits available under the Income Tax Act. The first deduction available is deduction for interest paid on housing loan. When you take a housing loan and need to repay it, the EMIs consist of a principal part and the interest part. The Income Tax Act allows for a deduction to be claimed on the interest repayment under Section 24 of the Act. The house can be either directly purchased or constructed. If the house is being constructed, the construction should be completed within 5 years from the end of the financial year in which the loan was taken. The interest portion being claimed as a deduction each year should not exceed a maximum limit of Rs 2 lakhs. However, if the house property is being let out, then there is no upper limit for claiming interest. But please note that the overall loss that can be claimed from house property will not exceed a total of Rs 2 lakhs. It is important to also note that deductions under this section can be claimed only from the year in which the construction of the house property has been completed. So what about a tax deduction in respect of interest paid on home loan during the construction period? Yes, a tax deduction can also be claimed on the interest during the pre-construction period. This pre-construction interest can be claimed in 5 equal installments beginning from the year in which the property is acquired or the construction is completed. This deduction on pre-construction interest can be claimed over and above the eligible deduction you can already claim from your house property. However, the total interest that can be claimed under Section 24 will still be capped at Rs 2 lakhs only. Next, we come to the deduction on principal repayment. The principal portion of your EMI can also be claimed as a deduction under Section 80C of the Income Tax Act. The amount here is capped at Rs 1.5 lakhs per annum. To claim this deduction, please note that the house property you have acquired should not be sold within a period of 5 years. If the house property is sold, then the amount that you have claimed as a deduction will be added back to your income in the year of sale. When we buy a house property, we pay stamp duty and registration charges too. So can a tax deduction be claimed on these expenses? Yes, we can claim a deduction on the stamp duty paid and the registration charges too. This deduction can be claimed under Section 80C as well, but within the overall limit of Rs 1.5 lakhs per annum. Please note that the deduction on these expenses will need to be claimed in the year they were actually incurred. Next, we move on to 2 additional and temporarily introduced sections in the Income Tax Act, Section 80EE and Section 80EEA. The deduction under Section 80EE is allowed to home buyers up to a maximum deduction limit of Rs 50,000 each year. To claim this deduction, the amount of loan should not exceed Rs 35 lakhs and the value of house property should not exceed Rs 50 lakhs. To claim this deduction, the home buyer should not be owning any other house property at the time of sanction of this loan. Also, the loan should have been sanctioned between 1st April 2016 and 31st March 2017. There is also an additional deduction available under Section 80EEA as introduced by Budget 2019. Under this section, home buyers can avail a deduction up to a maximum of Rs 1.5 lakhs per annum. In this case, the loan should have been sanctioned between 1st April 2019 and 31st March 2020. The home buyer should not be owning any other house property and should not be availing a deduction under Section 80EE to avail a deduction under this section. It is also important to note that the stamp value of the property should not exceed Rs 45 lakhs. Please note that only the interest component and not the principal component can be claimed as a deduction under Section 80EE and Section 80EEA of the Income Tax Act. Last, we come to the situation of deductions available on joint home loans. If a loan is taken jointly on property that is co-owned, each of the individual loan holders can claim a deduction of interest up to Rs 2 lakhs per annum or a principal repayment of up to Rs 1.5 lakhs per annum. So yes, it is definitely beneficial to take a loan with your family in order to claim a higher tax benefit. So I hope you found this video useful. If you liked it, please don't forget to like, share and subscribe to our channel.